And today we're going to be talking with loan officer Kathleen Bagley. Kathy has been in the business for how many years now, Kathy?
Oh, I've been a lender for 10 years, and part of that, I was a realtor for 8 years.
Yeah, so you have been on both sides of the fence then. So you
Yes.
understand the process for every angle, it's fair to say. Cool.
Yes, I do.
All right, so today we're going to talk about when does it make sense to go FHA over conventional financing. And as to illustrate some of the points I will be covering today, we're going to use a price point of $400,000. The reason why I feel this conversation is relevant is because there seems to be a stigma around FHA financing. And the reality is that many times it happens to be the better option for you as a buyer. So today we're going to unpack that. And again, the whole purpose of this conversation is just to arm you and equip you as a potential buyer, so you can be a knowledgeable participant of our Spokane real estate market. Sound good? Right, Kathy. So to start, tell us again, if someone is looking to buy at a $400,000 price point, what criteria should they use to choose one loan option over the other, meaning FHA over conventional or vice versa?
Well, Alejandro, first of all, thank you for addressing this because FHA and other government loans like VA do get a bum deal when it comes to making offers with government loans. They are beautiful loans. They serve the same purpose for the buyer to be able to purchase a home. The main difference between FHA and conventional, besides the fact that FHA and VA is a government loan, is the qualification for an FHA loan is more forgiving. You can have a little bit of a lower credit score or perhaps a past history of some trouble with your credit, and you can still get pre-qualified with an FHA loan. A lot of first-time home buyers who have wonderful credit, but perhaps don't have a lot of cash in the bank, as we do when we're young adults. We call that reserves in the lending. And if you don't have a lot of reserves, sometimes FHA, you can get an approval on FHA, whereas conventional sometimes requires reserves. So, and sometimes an FHA works out better for a borrower because mortgage insurance on a conventional loan can be higher than on an FHA loan, thus bringing the monthly payment lower.
Let's just stop there for a second because there's a lot of misunderstanding around MI, mortgage insurance. And one is to be avoided at all costs. And that's not necessarily the case. But when it comes to the cost of it between FHA and conventional, I think it varies depending on the qualifications of the borrower, meaning at a certain credit score level, FHA becomes less expensive with FHA than conventional. And then once you go above that threshold, then the opposite is true. Then conventional MI is less expensive than FHA. Is that all fair to say?
Yes, that's correct. So an example of that would be, say you have a borrower that has a 780 credit score. So if I was to pull up mortgage insurance on a conventional with a 780 credit score, the rate is a quarter. Okay. On FHA, it would be a half. It's really 0.55 and 0.23, but just to kind of make it simple. But if let's say the credit score is 660, same borrower, then on a conventional, the mortgage insurance might be 1%, but on FHA, it's a half. So sometimes it makes sense to go with the FHA because, again, the monthly payment is lower because the mortgage insurance is lower.
Yeah. So to recap, if you have, and I mean, 780 is pretty high. Say, I would assume the same will stand with someone with a 740 credit score. Well, would you agree?
I think 740 and 780, you're probably going to get, it's going to be slightly different. Maybe with the 780, which I checked this morning, was 0.23. And maybe with the 740, it might be 0.4.
Okay. So just to make sense of these numbers, for anyone watching, if you're, say, let's just stick with the 780. If your credit score is 780, at that point, your cost for MI is 0.25, so a quarter of a percent.
Correct.
Versus FHA with that level of credit score, FHA will be twice at 0.5%, correct?
That's correct. All FHA loans right now, the mortgage insurance is 0.55. And incidentally, it used to be 0.85, but the government has lowered it to enable first-time home buyers to be able to afford to purchase. With the rising interest rates and everything, this is a way that it's helpful for the first-time home buyer, particularly, to get into a home and have lower mortgage insurance.
Right. So it went from 0.8 to 0.5.
Correct.
So now, if you have a credit score of 680, then you're looking at a cost of, and every time I say MI, I'm referring to mortgage insurance. So if your credit score is 680, then your MI on a conventional loan will be 1%, and FHA will be half of that, 0.5%.
That's correct. So that would be a reason to choose an FHA loan.
Right. So for someone wondering, well, what does that mean for me as a buyer on practical terms? Well, what that means is that your monthly payment, if your credit score is 680 and you go with a conventional loan, might be at a purchase price of 400, it might be what, $100, $200 higher than going FHA?
Well, again, it depends on the other circumstances, but and the purchase price. So the higher the purchase price, the higher the mortgage insurance.
Right. So someone buying at a $400,000 price point, what would you say would be the difference? And with a credit score of 680?
Let's see. I ran those figures this morning, and on FHA, the mortgage insurance on a $400,000 purchase price was $157.49 per month. On a conventional, it was only $72.83. I ran that with a 780 credit score. If you're like most people and you have a 660 to a 680 credit score, it will be reverse. It would be closer to, well, in this case, it would probably be around 300 on a conventional, probably 250 to 300 on conventional, and 157 on a FHA. FHA mortgage insurance is always 0.55 at this time.
Right. So if your credit is 680 or below, then potentially your cost for MI on an FHA loan might be half of that of a MI on a conventional option.
Correct.
Right? That's what we're saying. Another misconception is MI on an FHA loan stays with the loan for the life of it. When the reality is, and please correct me if I'm wrong, I believe the reality is that if you put 10% down on an FHA loan, MI does go away. Is that true or not?
Yes, that is true. If you put 10% or more down on an FHA loan, your mortgage insurance will stay on the loan for 11 years.
There we go. So there are two ways to get rid of MI on an FHA loan. One is to do 10% down. And the second one, of course, is to refinance out of it.
Correct. Some people, especially first-time home buyers, they're buying a smaller home. Within 5 to 7 years, I believe the stat is, you will end up buying another home. And at which point you may choose a conventional loan and, using your equity in that you got from your first home, you may not have any insurance at all.
There we go. So what else? And by the way, we're not trying to push anyone to go FHA over conventional by any means. All I'm trying to do is provide real accurate information about how these two loan programs function with the pros and cons of each one of them. So you can then choose as a buyer which one is the best option depending on your situation. Because the common perception is conventional financing is always a better option than FHA. And in reality, like we've been saying so far, that is not necessarily the case. So with that said, Kathy, in what other circumstances will FHA financing will be more beneficial than conventional financing?
Lending is a very individual puzzle that we put together. And I would just suggest that when you talk to your lender, have them work up both scenarios for you and let you look at it and decide which one works best for you. The overall picture is FHA is a great loan. It's a little bit more forgiving on the credit approvals. And sometimes it has a lower payment.
Right. Like we've been saying, in this case, by virtue of having a lower MI cost, automatically lowers your monthly payment.
That's correct. And the interest rates tend to be
I would just
a
go in
little
there.
bit lower. So this morning when I priced them out with our scenario, 400,000.
Yeah.
And I did a 5% down payment for both loans so that it is virtually equal.
Yeah.
The interest rate for the conventional was 6.75, and on the government loan, FHA, it was 6.25. So, but as it turned out, the payments are practically the same. On the conventional loan, your payment was $29.70 in this case, and on the FHA loan, it was $29.71. So, again, the factors of your credit and your reserves and the loan to value will determine which loan is more advantageous for you at this time in your life.
There we go. Yeah. Once again, we're not trying to say that objectively one is better than the other. It's all based on your specific circumstances. What is objective, though, is that today, and I'm looking at it right now, by the way, for those of you who want to stay on top of mortgage rates, we use an app called Mortgage News Daily. And it updates every single day with averages about averages on rates. So what is an objective reality is today the average for a conventional loan interest rate wise is higher than the 30-year fix for an FHA loan. So does that mean that you will get the lower rate automatically? Well, no. We're saying that that's going to depend on other factors as well. So anyway, so anything else, Kathy, that we need to know in terms of differences between FHA and conventional financing?
Well, a lot of people hear the term Fannie Mae, Freddie Mac, and those are the conventional loans. And the FHA is a government loan. They're both beautiful loans. They get you into your home, and a good loan officer will show you all your options and let you make a decision.
Right. So the bottom line is ask questions. Every time you meet with a loan officer, ask questions about the different financing options available to you. Well, Kathy, thank you so much for being here today and
Thank you. It's been a
carving out the time to share your knowledge and expertise. For someone who might have additional questions, how can they get in touch with you?
You can just go to the Wheatland Bank website and you'll be able to find me there.
Okay, fair enough. Right. Well, thank you again. And for those of you watching, hopefully you got something out of this conversation. And we will see you again next week. Make it a
Thank
great
you.
day. Kathy, you can stay on.